Hey everyone, welcome back to Upside Down Data. So in this video I wanted to bring you an update about what the upside downside potential indicator, which is what we're looking at up here on the screen for Bitcoin, is telling us about price action right now, both for Bitcoin and for the crypto market as a whole, and what we might be able to learn about the trajectory that we're headed from a look at the risk information. So if you like the content, subscribe to the channel, like the video. Give us a follow on Twitter at Upside Down Data. We put out regular updates there about our UDPI risk indicator and more. And we also love to chat with folks over there. So if you'd like to share some ideas or ask any questions, feel free to do that in the comment section down here and or over on Twitter, whatever works for you. So this is the entire price history of Bitcoin on a logarithmic scale, color-coded by risk. You might be pretty familiar with this kind of thing if you've checked out some of our other videos. But what you can see pretty clearly, and it's good to have the whole price history up so we can put this in context and see other times when this has happened, is that we're about to flip green. We're starting to see a little bit of green emerging there on the chart. And what that means is that we're approaching a pretty critical level historically of -2 on risk. The reason I say that's a pretty critical level historically is because if we look at the UDPI output in this way instead, you can get a little bit more precision when you look at it this way, and you can see the trend a little bit more clearly as opposed to the color coding. We can see that the -2 level has been a level that Bitcoin has interacted with many times in the past. So back in its early days, it treated it as support for quite a while there before making a few blast-offs into new orders of magnitude in price before retracing, and then during the bear market, after that first massive series of run-ups, treated the -2 level as a resistance. The price kept the risk level down. It never even got to to a kind of equilibrium up there. It was always really getting pulled to the downside. And so that was a great accumulation period when we saw the risk level consolidating under -2. But then it flipped it as support and then blasted off for that memorable 2017 run. Came back down, bounced off it as support a little bit, but then lost that level, and then there was a major drop down to the -5 level, getting about as oversold as the price has ever gotten. And since then we've again seen that this -2 level has acted as support before this run up in early 2021, and now we're pulling back toward that level. And so we've been saying for a few weeks now that as we approach that level of -2, we want to see what happens, because there's been action around that level in the past on a repeated basis, and so it'll be interesting to see whether we get some kind of action around there again, whether that means a bit of consolidation around there, kind of trying to decide which direction the risk and the momentum and the price are going to trend, or maybe a bounce off of it, or of course it's possible that the risk will blast right down through it and continue to -3. It's going to be informative to see what it does as it approaches that level. Right now, we're not really seeing much of anything. It's just kind of grinding down there. And after the price drop of a few weeks ago, which was pretty dramatic, we're still kind of leveling off from that, still kind of absorbing that shock to some extent. And so now the risk has largely reset after having a bit of time to do so, maybe not completely, but has largely reset after that major move to the downside down to 42K. And now we're going to see how it reacts to this new level. So, that's probably the most important thing that we need to be watching in terms of this risk information. We can also get some more information just by looking at, all 23 assets that we're monitoring across the space. That includes Bitcoin. We can see it's at -1.84. It also gives us a look at Ethereum, which is now in negative territory after hovering in the positives for a bit longer than most other assets. And we can scan across and see that most needles are still pointed well to the left, which as you know, it means limited downside potential that's realistic for the near future. It means that a lot of what the model would consider to be realistic downside potential has already been realized. So for many of these assets, on a historical basis, there's not much further down to go, but there's plenty of room to move up. So as I said, it's been a very choppy time in the market. It's been, I think, really trying the patience of market participants. Both the bulls and the bears have been kind of doubting their expectations. It's been taking so long for the market to make up its mind, seemingly. So we're gonna have to wait and see. But there is a kind of a directional bias that's emerging here. If you just average across 22 of these, and just not counting Bitcoin, because to some extent that deserves its own, its own number, its own value. But if you look at the other 22, the average UDPI reading here is minus 2.11. So, that's clearly indicative of more upside potential than downside potential being realistic. A lot of the downside potential across the market has already been realized, but not all of it. Minus 2.11 is a negative value and a pretty well into the negatives, but we could still trend down toward the minus 3s or minus 4s. It's certainly possible. Not something to count on, but it's possible. We have a few assets here that are below minus 4 still. So from an accumulation standpoint, it looks like a pretty good time for DOT, for HBAR, for Helium, for VeChain, also for Kusama, for Link, and really for plenty of others. If we just compare these to historical values and what the returns were for accumulation when the UDPI was flashing these very negative values, it's favorable historically. That doesn't mean that it turns out well immediately, but it tends to turn out well to accumulate at these kinds of risk levels in the long term. So that's not financial advice, but that's a clear piece of information that we can glean just from a glance across of these. The last thing that we like to look at is the trend. This is the last 30 days of all 23 of those assets. And you don't need to pick out specific ones of these. You can if you want to, but what I really want to highlight is just the change in trajectory, the change in character that you can see on many, but not all of these charts. It seems like some of these are thinking about having bottomed. Maybe they've bottomed yet. Maybe they haven't fully decided whether they've bottomed yet. But one thing that's for sure, I think, is that for the ones that have bottomed, that indicates that the risk has caught up to the price action. The price action was violent to the downside a couple of weeks ago. For a lot of these, the risk has reset. And now we're going to see if the market will assume a trajectory. As we've talked about in other contexts and other videos, we still think that this is a long-term bull market. On a macro scale, there's a lot to be optimistic about, but nobody knows what's going to happen in the short term. So the best that we can do is keep our eye on these data. That's what we're trying to do here. So I hope you found it useful. That's all for now. See you next time.